BBIG sues lenders in defense of Vinco shareholders for $250 million. The lawsuit filed in the United States District Court for the Southern District of New York accuses the defendants of engaging in death spiral or, in quotes, toxic lending. These unregistered security dealers are alleged to have made unlawful predatory loans to publicly traded companies, including Vinco, resulting in significant financial detriment to the company and its shareholders. On January 21st, 2024, representing close to 3,000 shareholders of Vinco Ventures, aka BBIG, which is a previous short squeeze play that we have touched on as well as made money on, is proud to announce the filing of a significant federal lawsuit against toxic lenders seeking damages of over $250 million. And the SEC just probed B. Riley. U.S. authorities are investigating B. Riley Financial deals with a client who was linked to a securities fraud and the use of his assets to help the investment bank obtain a loan from Nomura Holdings. However, B. Riley says in a statement that they were unaware of any SEC investigation regarding any matters and that they would cooperate if such a situation occurred. Now, this may be a sell the rumor, buy the news type of deal, or buy the rumor, sell the news type of deal, but we've been touching on how banks aren't doing too well, and it seems like the number one thing in the air is fraud, toxic lenders, and overall a crackdown. On top of that, the CEO of ticker symbol GNS has finally tweeted, "Genius Group has been in a quiet period. A long time ago, everyone said Adam Aron can't speak on this because of the quiet period. Yes, this is a thing, and I'm excited to see what Roger Hamilton has to say because he previously spoke on Naked Shorts on his company. However, he did cover that GNS is actually doing extremely well as a company, so keep this one on your radar to maybe give shorts a run for their money once again, because this stock did go up 600% in a single day." What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to cover, and I'm going to cover AMC's chart and then GameStop's and then the data for both and some additional stuff to close out the video, such as the overall market, a couple of trades that I want to watch, as well as crypto. So watch until the end because we have something that's a little sprinkle on top at the very end as well to keep on your radar. So without further ado, guys, please hit the like button. Get us to 18,000 subscribers. We're literally like 110 away, I believe. Let's get into the video. AMC trading at $4.46, down 1.1% on the day. Now, this trend line AMC has been touching once, 2, 3, 4, 5, 6, 7, 8, 9, and now almost the 10th time, right here. You could say that it bounced off of it, but very, very closely. It is still playing out to exactly what we are tracking. AMC is still holding this slightly aggressive uptrend that we have been trading in, tracking before the January 2021 run-up, and there's not much to say about it until we invalidate or enter the blue zone. I'm watching for 525 this week. Nothing has changed. One thing I wanted to note, every single time AMC did test this trend line, right, since we are sort of testing it right now, every single time AMC did test this, you saw a 91% gain, a 100% gain to the relative peak, and then, of course, the run in January and then in June, which based off of this trend line right here. The only time you broke below was down here during this entire consolidation phase, which is the same cycle AMC's tracking now. However, we're sitting above the trend line. And I think the reason for that is because AMC doesn't really have room to fall lower, right? In that case, Adam Aron would have to reverse split it once again. Overall, everything is still looking decent, still looking to what we've been tracking with AMC. But GameStop, we really need to touch on GameStop. So previously, this is what we were tracking with GameStop, the stair-stepping method coming into the January 2021 run-up, which lines up with AMC. And finally, I think we got the cycle lines down pretty good, right? We set the cycle line here. We always watch these U-shapes for the start of the cycle. This is what algorithms like to do. And it lined up to the next one, right? The beginning of the next one from the beginning of the first one. And if we zoom out, these are where the cycle lines lead us, and on the 2-hour time frame, it looks even better. Every single time you see the algorithm start a new cycle, and I wanted to talk about this. From the beginning of the cycles, every single time GameStop hit a relative peak during that cycle. And right now, we hit that relative peak on the macro trend line 72 days into the cycle. The last one, 58, the last one, 72, 72, and then 51. So you're seeing sort of a pattern here, right? This was the squeeze in January, and then during the cycle, it hit a second relative peak. Now, this is optional during the cycles. You can tell 92 days in, it hit a second relative peak, which is lower than the first one. Of course, this was the January run up back here. The second one as well 91 days in, hit another relative peak, which was very close to the first one. The third cycle, 91 days in, you can't make this up, hit another relative peak, which was slightly higher than the first one. And then the next one, 140 days in. With that being said, from anywhere between January 8th, which we are already past, to February 23rd, GameStop could hit another relative high anywhere from $19 or higher, but this would finally break it out of the macro trend line, which we have not seen in any of the cycles for GameStop, of course, since the January 2021 run up when we ran to $500, right? So I just wanted to put this on your radar as of right now in case we are being put through another cycle. After that second relative peak, there is a hard sell-off in each of these cycles every single time, bringing GameStop to a lower low. So I want to put that on your radar. AMC, 1.6 million shares available to borrow according to Stock Tracker, 18,000 calls compared to 14,000 puts expiring in the money. So we are finally for once winning on the options chain for AMC, as well as 40,000 calls expiring out of the money compared to 30,000 puts. So slightly more betting bullish than bearish on AMC, and honestly I don't think it's a bad time to do so. However, that expiration date is way too close. If anything, I would be looking for an expiration date of June, July, right? Because I want to see rates cut in March or May. So those are the timeframes I would be looking for. Short exempts still very high, 246,000, then 205. So they have dumped it as much as possible. This shows that the algorithm is trying to push AMC higher, in my opinion, because of how low the stock is and how small the moves are. They need a ton of short exempts to just contain it. According to Ortex, 9.46% short interest. So not really seeing a major decrease or a major increase. We just watched this for the trend again. GameStop, 80,000 shares available to borrow, 2,000 calls compared to 2,000 puts. So the option chain is basically evened out, as well as the ones out of the money. Short exempts still somewhat high for GameStop, 11,000, then 10, right? Now, for hedge funds, the science of catastrophes helped generate the best returns of any alternative investment strategy last year. Basically, what they don't want to tell you is that hedge funds, large institutions last year on your misery when the stock market was selling off in 2022, right? Part of 2023, that generated them the most gains that they have actually ever been generated. Now that towards the end of last year into this year, we saw the S&P 500 has been rallying. Short sellers have lost $195 billion, and that is before it reached its all-time high, which we are about to talk about in 1 second. Now, before we do that, guys, make sure to get in the Discord. I'm in on a daily. We talk stocks all day long. I also post my positions in here. I'm going to leave the link, the second link under the video, as well as pinned in the top comments in case you guys do want to hop in. Also, guys, 15 free stocks, each valued up to $2 grand per stock, and a very good broker to use, and 8.1% APY on your uninvested cash. I'm going to leave that link in the top of the description, as well as pinned in the top comments. Once you sign up, open an account, and make a deposit of even a penny from your bank, you're going to start earning benefits from there. Now, the S&P 500, 483.88, broke the all-time high of 480. A lot of these stocks, where are we going to go? The March Fed meeting is when we are assuming they may raise rates. However, it's getting more unlikely that they may do it that early, and it could come in May instead. With that being said, looking at the SPY, if we do start to sell off at some point in the near future, I think we do come back down to 480 and base off of that level. And if anything, come back and base off of 477.50 or 477.75. I think the SPY has to really hang out at that level and say, I'm ready to move higher, right? And once it does that, overall coming into April, I think the SPY is going to be around 515. That's one of the targets I'm looking at, touching this macro trend line, okay? Other than that, if we get negative news during the March Fed meeting, I'd watch for the SPY to get a harsh sell-off down to 440. I really would. And on top of that, it may bleed until the May Fed meeting to fill a couple of gaps down to 430. Potentially 423, potentially 418, right? This will be very bearish, but it won't last long in my opinion. These are the two outlooks I'm looking at for the S&P 500. Also watch for some temporary resistance if we continue to climb at 500 even. Now, breaking news, Grayscale has transferred 15,816 Bitcoin worth $643 million to Coinbase. This is a huge amount, and it seems like they are not done with Bitcoin dumping. Grayscale high ETF fees is the big reason behind the selling. You look at Bitcoin, yes, it is selling off, and it did break below a support trend line once again, testing 40K. If we break below, you're looking at 38,000. However, Jim Cramer says it's unlikely that Bitcoin finds its footing, which makes me think, maybe Bitcoin is about to just explode. And in my opinion, this is one large shakeout. Speaking of one large shakeout, we talked yesterday, Terraform Labs is the company behind the algorithmic stablecoin Terra, as well as the sister crypto Luna. And Terraform, yesterday we posted a short on it, has just filed for Chapter 11 bankruptcy, filing between 100 500 million assets as well as liabilities. Now that's not much, but I think they are shaking people out of crypto right before the massive run, before the Bitcoin halving, and I am still holding my crypto. On top of that, BlackRock and Fidelity hold more than 64,000 Bitcoin worth $2.6 billion, and they're buying 433 million every day on average worth of Bitcoin. Tesla, 210, down another percent. Not much to talk about until we get to earnings. It is the 24th. Just watch that Tesla earnings. You're either going to see a very harsh gap down on Tesla or a very large gap higher. Based on the cycles, we have been looking for Tesla to gap higher and start scaling higher coming into March and May of this year. And I do still expect that, but there are some levels Tesla could come down to, such as 177, right around that range. If earnings come out bad, that is exactly where I expect it to flash down to. Speaking of Tesla, here is the last 2-year return of the Magnificent Seven. Nvidia up 154%, Microsoft 37%, Facebook 27%, Apple 20%, Google 14%, Amazon 9%, and Tesla is the only one down 32%. Just like we've talked about, Tesla hasn't been keeping up with the Magnificent Seven, and if their earnings reflect that, this is going to be a bad thing to see. If their earnings don't reflect why it's not keeping up, and it should be keeping up, then this is a massive dip by opportunity in my opinion. Ticker symbol HBAN, we played this in the trading challenge the other day, and we are up a bit on it. Trading account now sitting at 366. Guys, if you're not in the trading challenge, it's the third link under the video. This account was funded by Frenetically themselves with $300, and we have been slowly scaling it, taking a trade here and there, and the goal is for percentage gain profits as well as consistency. And the reason for that is because you can copy my trades with a click of a button, but be trading with a much larger account. If you're trading with 10K, for example, and you set your trade limit to that, as mine set at 300, if I make 5% every single week, 10% every single week, 20% every single week, and you're making that on your 10K, that is going to be a substantial gain. So follow me on Frenetically and make sure to get ready to copy my trades if you'd like. None of this is financial advice, and I am not a financial advisor. PayPal's CEO said he would shock the world on January 25th. Get ready for a potential catalyst for PayPal. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Hit the like button, get your free stocks, join the Discord. I love you all. Lottery Stocks out.